Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick on the show this morning. Another merger in the defense sector, Harris merging with L3. We have a lot of ratings today, some earnings to discuss as well. A couple this morning, just Schwab and Bank America, but this is a big week for earnings. Tomorrow's a huge day, so we'll talk about the biggest companies reporting earnings the next few days here on today's show. Our guest today, Gil Morales, will join us at 8:35. He is the author of the Gilmo Report and the managing director at MoKa Investors. And Joel, what is the word in the overnight session here?
We're all down only 275 here at 227.66. And we'll call it 66 even. There's down 2.5. Strong close on Friday, but we sold off overnight. Got down to 45.25. That's just below Thursday's close, so 20 handles above that. Friday's low at 32.25, and our weekly low 12.25. So good 40 handles away from that. On the upside, your pre-market high is 71.25. Your last after hours print was 72.25. I'm looking for us to clear, just call 2,800. We cleared 2,800 here, and I think we can really lean on that 27.12.25 low. Crude trading up 60 cents at 71.94. Little tensions, U.S. Saudi Arabia tensions, maybe get a little bid boost to crude. Gold now well over 1,200, up 10.50 at 1232.5. Silver up a dime at 14.73, and Bitcoin, that's up $207.50 at 64.10. So that $6,000 support level holds once again. So we got a special guest on the show today.
Did you special guest?
Did you tell him to tweet out that he was?
I only went part-time for 2 days on you.
Yeah. Did you tell him to tweet out that he was coming on the show today? Dennis is a prop trader. He started.
And I don't have 65 positions on. I actually took most of Friday night off. It was such a busy week. I only worked till 5:30 on Friday, so I only worked an hour and a half. So I took off early. Had a nice went to Craft Brew Fest there, and or Craft Beer Fest in Windsor. Beautiful time at the Willstead. So it was a nice night, and I enjoyed my couple hours off there because usually I work till 8 o'clock.
All right, and I don't want to spend a whole show talking about sports, but I had a pretty good sports weekend.
Oh, I heard the Michigan win. So why are you not wearing Michigan gear?
I only wear it on Fridays.
Your nice, dressy blue Michigan shirt.
You should know I wear that on Fridays before games. On Monday, no. I don't know if people notice, but during football season, every Friday, I wear a Michigan shirt.
Is that what Friday? So you don't wear it on Mondays, even when they win. You don't wear it.
No.
And the Lions didn't lose, so that's a good thing.
Yep.
All right, let's not get into Detroit sports here, Michigan sports. Let's move into the markets because there's all kinds of volatility here. Again, talk about the S&P range overnight. We were actually up Friday night. We gave it all back this morning. We're bouncing a bit here. All over the place. Joel, what's going on?
I recapped it at the beginning. We're traded down 2.25. Interesting. We had a strong close. We closed at 68.50, and then I like to watch it right to that 5 o'clock hour, and they jammed it another 4 points up to 72.25. So you look like you're going to have a lot of follow through on the upside. I didn't. We sold off all the way to 45.25. What's mid-range? Mid-range is 58.25. I just think you're really going to have some seesaw action. Really the bulls are going to try and confirm that low from last week is like the lowest we'll ever trade again for the next 10 years. And the bears are going to try and push it through that level and see if we could take out 2,700, and do some work in the 2,600 handle. But you could feel the volatility, at least so far, is coming in a little bit. Keep an eye on the closing price, 27.6850, as well as those equities that you're trading. Closing price is always important.
Let's jump over to individual stock news. We have a merger this morning. Spencer, give us the details.
Yep, another merger in the defense sector this morning. L3 Communications, triple L is the symbol there, announced a all-cash merger with Harris Corporation, HRS. Let's see, the ratio is Harris shareholders will own 54% of the new company. Triple L holders will own the other 46% of the new company.
So merger of equals all stock deal.
Yep.
And so we've got L3 Communications trading up about $9.72. Harris is trading up slightly on some odd lots, bid up a little bit here this morning. I own Harris in my long-term investment portfolio, so I guess I'm going to own L3 now too. I bought Harris back during the financial crisis at 27 bucks. It's went up to 154, so it's been a really good one for me. I think I'm probably sticking with it. I mean, there are going to be some synergies here. We'll see what happens. I don't know short term. Both of these stocks are out of favor. So I think if you got a big lift in here short term, I think that lift might get faded. But that's just because everything kind of turned out of favor. And if you look the last few days on Harris, a week and a half ago, we're up at 170, and obviously the market's hit it overall, getting down to almost 150 bucks on Friday. If you go look at L3 Communications, you can put those two charts on top of each other, almost the same thing, 212 just 4 days ago, and then obviously the big market sell-off hitting it as well. So I don't know. I think I'll probably just stick with it though.
And second merger, right, in the sector within the last week or so.
What was the other merger? I forget.
I was going to put that in my notes. Two pretty big companies. So I don't know.
What was it? I have goldfish memory here. There's so much market action. It's hard for me to remember a merger.
I'm going back.
Chad, help us out here.
Back in the
Spencer's
pro real fast.
too.
I'm going back in the pro. I know what you're thinking.
I remember there being a defense merger too, and now I can't think of who it was.
I have to go to the expert.
He's going as Brent now.
Everybody's sleepy here. It's Monday morning.
It's Monday morning. Well,
even the chat's quiet. Got crickets coming from it. Gerald, did you I remember a merger there too, though, in the defense. Who was it?
I feel like it was back like a month ago now. Forget it. I'm not. It's not going to
come too long ago. A month ago doesn't matter to us anymore. We're short-term traders here.
Yeah.
A month ago might as well have been 5 years ago.
Yeah. Well, traders.
Joel threw us all under the bus on this one. He's trying to figure it out. He's really talking. They're really scrambling.
He's really here. It's okay.
He's like, news desk, help me out here. Who merged?
All right, Joel's not going to move on until we look at.
He's still got.
So I'm going to move on.
He's still got the hangover from partying after his Michigan victory.
Yeah, I know. All right. Should we? While he does that, can we move on?
He's still figuring out. Let's go back to earnings.
Can we go to?
Me and Spence will just run the show. Joel will keep talking in the background.
All right. Dennis,
you should show the video of this right now with Joel. He's got his headset off. He's yelling at the news desk.
Brett is sending me the tickers right now here.
Okay.
So just so
Bank of America earnings. We saw a lot of the banks report last week. They all reported, they all rallied, they all got hit. That's always seems to be the story there. They never hold the gains. JP Morgan closing on the low or near the lows on Friday there. So now you get Bank of America reporting here this morning. It is lifting a little bit in the pre-market. Give us the numbers. Joel, break down that pre-market trading action.
66 cents versus 63 cent estimate. Sales 22.8 versus 22.89 billion. So a beat on the EPS, a miss on the sales. That's like always the case with these bank stocks.
Trading, that's good news. But the bad news is it's a bank and they seem to always sell them off eventually here. So I'm not buying any bank earnings that's trading up. I know we're in an interest rate environment. Interest rates have been going up. It's supposed to be good for banks. It hasn't been good for banks. They're all out of favor. I think any rally gets sold here too. Can it rally a buck or two? Could it get up to 30? It could do that. But I mean, the trend is not your friend here. So I'm more apt to sell the rip as opposed to buy the dip on BAC.
It was TransDigm, TDG, and Esterline, ELS, and that was on last Wednesday that the merger happened in the defense aerospace industry. Moving on here, Bank America. I mean, what a call. I don't know if it was Spencer or me or you or whatever. We just talked about JP Morgan and just, the chance that with that ugly looking chart that it may give back some of those gains. That's exactly what happened here. So I don't know if you're looking for a replay of that in Bank America. It is trading up 16 cents at 28.62. That's the highs of the pre-market session right now. So we'll keep an eye on that. Just an ugly chart here the last couple days. Long ways to go up to 29.04. So I'll use that 29.04. That was a high from Friday. Thursday's high 29.25. So to me, they get this thing back over 29. Good earnings. I look for a move higher. below the close of 28.46. Friday's low is way down at 27.73.
Just getting a question from the chat, and this is a good one here. We were just talking because I bought a bunch of stocks back during the financial crisis, my long-term investment portfolio, and those have always all worked out very well. Harris was one of them. Scott in the chat is asking me, so for your long-term portfolio, ones you bought, stocks that you bought out of the financial crisis, and you're up a lot in. Obviously, we're up a lot from the financial crisis when we bought them in the S&P at 666. Would you be a seller of most of those stocks if you thought that we were heading for another bear market, or would I hold through that? That's a great question. It's a question I ask myself a lot too, Scott. So there's no straight answer. But I'll tell you, I'm a little bit nervous on this market because you know what I did on Friday? It's funny you asked me that. And this is something I don't typically do. I sold half my MasterCard position. So we rallied nicely, from the lows, and I'm looking at this MasterCard. I was looking at the PE, and I'm like, it's been an incredible run. I'm averaged in from $16 on MasterCard. It got up to $225, and I just feel like now I look at this, and I'm like, man, maybe it's a time to ring the register on some of this because I don't know if we're heading for, tougher times here. And I would hate to see some of my MasterCard gains go away. So obviously we got a nice lift on Friday. If we look, from Thursday low, we were 192 on MasterCard. We got up to 205. I sold on the 203 handle. So I sold half of my MasterCard position, took a huge gain. So what I did was, I'm like, I'm going to pay the tax man at the end of the year on that one. I was like, well, you know what I have a huge loss in? Is Ford. So at the same time, I took a big loss and took a huge chunk of my Ford stock off, held a little bit, but took a good chunk of Ford off there too, to try to partially offset my MasterCard gains. It's not going to offset all of it, but it's going to offset about a third of it. So anyways, and so I got rid of some Ford and I got rid of some MasterCard in my long-term investment portfolio on Friday. Ford has just been a dog. I don't know what's going on. Is it going to ever come back? Maybe. That's why I kept a little bit, but I'm not banking on it. And I had talked about this already, selling some of this at the end of the year for the tax loss. I'm averaging about $13. It's been terrible, down about 13% on or 30% on it. And sometimes you just got to, say, hey, I was wrong. This is a long-term investment, but you know what? It's telling me something else going on.
And what about all that cash?
We've had a great environment for the autos, and the earnings have been pretty good too. And the stock just keeps going down. The dividend 6.91%. It feels like GE all over again. So I was comfortable taking the loss and saying, okay, if it does come back, well, that would suck. But for me, if I'm taking that huge loss, but at the same time, I don't know. This could be $5. It could go anywhere. So. And I wanted to take some of that loss just because I don't want to pay that big tax bill on MasterCard.
Did you redeploy, or are you just waiting for things?
No, raising some cash. So I didn't mind. So I took, I took a little chunk, and it's not like I took a huge amount of money out of the market. I would say that was probably 2%. So I probably raised another 2% with those sales. So I'm still probably sitting at 25, 30% cash. I'm too much cash anyways. So I actually should be happy that it's selling off. But that being said, I always said I like to have the cash buffer because I went through the financial crisis and I watched my investment portfolio when we were at S&P 1500 go down to S&P 666. I watched my investment portfolio get cut in half. And I said, never again. Am I going to watch that? My net worth basically get cut in half. And I was like, never again. So I've, held a bigger chunk of cash. It's been the mistake because we've obviously been in this, very strong market here, but at least I'm comfortable. I know on the cash component, like if we ever went to a market crash and we lost like 50 or 60 or 80% or something like that over the course of, some time, I know on the cash that I got, I'm pretty comfortable that I'm still okay. So, and I think you play the same way too, Joel. We talked about this before, but you like having it's because we got burned in the financial crisis. Yeah. So, and I got burned in the tech bubble a little bit too. And I was making a lot of money. Those were my best trading years. But my investment portfolio obviously gets hit because I'm a long-term investor. And it's going to get hit during those times. And I don't want to get hit like that again.
Yeah, yep. And cash is king, and being able to redeploy it. And are we creating a 2008 financial crisis scenario? I wish I could tell you that, or 1999. I will say that as much as you talk about, some of these stocks that are leading the market, Apple, your market leader, your biggest component. Now, if that was trading at a 60, 70, 80 PE, I would be have a little bit, different opinion, but it's just not the same. And when you mentioned selling that MasterCard, it wasn't at a 40 PE when you bought it. So
no,
as much as
the PE is a little bit scary. And going forward, if we get the forward PE on MasterCard, do you have that in front of you, Spencer? I can go grab it quick. It's not
I'm grabbing
40,
it.
but it's not cheap either. It was, fairly cheap when I bought it back during the financial crisis. It's not anymore. I mean, if we look at a forward PE, we're looking at
40.
29, 30 times on a forward PE. It's not cheap. So I'm kind of selling it. I bought it cheap, and I'm kind of still selling it kind of expensive. So even though it's not 225 anymore, you can say it's discounted from where it was at 204. Yeah, it would have been nice to sell at 225, but I didn't know the market was going to go into the gutter here either. And the market, everything looks broken. Like when I look, and let's just take this to a market talk. When I look at the S&Ps, I see a broken chart. I see, a lot of people, maybe the overall trend is still kind of there if we hold 270, but it's an ugly couple of candles there, even when we go out to the weeklies from the last 2 weeks. So I don't know. I just think there's a lot of unknowns here, what the world markets have done. I don't think we're coming out of the woods here overnight. So when we get a nice rally like we did on Friday, when we're up 500 Dow points, maybe it's a time to take a little bit of money off the table, get a little more comfortable, and obviously it was a good call, at least in the morning, because we sold off hard and Mastercard went all the way back down to almost scratch. So it did rally back at the end of the day here, but I just don't think this is the time to be coming in here buying the dip yet. I think you're early if you're buying the dip, but maybe I'm wrong. That's the way we're.
Well, there's one thing. There's one thing that you can bank on when you have a monthly candle like the size of the red candle in the S&Ps or the spider. There's going to be at least another red candle like
nervous
that.
money.
Or, yeah, I mean, you had a big red candle like that in late 2015, right? That was in August. You had another, not as big, but you had another red candle the following month. You started to get some volatility at the end of 2015. There you had 3 candles of 3 red months of candles, and then pretty much staying the course. Then you had the little upset at the beginning of the year. You had the big red candle that was preceded by another red candle before we started the rally. So it's just, we're just not going to have a big, thick green candle. I mean, it's nearly impossible right now with the market dynamics. I mean, if you look at this on a monthly chart using the December contract, we hit 29.44.75. I mean, we're nearly 180 handles away from that. So it's, just sit tight. I mean, there's going to be another red candle for the month, and
I think
perhaps
so too.
that month.
I don't think we're out of the woods at all.
Yep.
And that's why I was sort of raising a little bit of cash in my investment portfolio, get a little more comfortable. Maybe I'm really wrong. And we can be wrong. And I mean, you've got to be able to change. I was dead wrong in my Ford investment when I thought, I think Ford and GM are turning it around. GM was talking about autonomous vehicles. They were talking about electric vehicles back, when this was last year. And I actually added to my Ford position. It was a mistake. And sometimes you just got to say, even in your long-term stuff, and say, okay, yeah, I'm a long-term investor and I'm not on margin and I can hold forever. But do I want to hold forever? I don't know. I think the story here just looks broken, and you got to analyze. The biggest thing hitting the autos and hitting the home builders is interest rates. I mean, when interest rates are going higher, people aren't going to buy new cars. People aren't going to buy, or be going. And obviously, the housing market's going to get hit. They're not building as many new houses either. So that's like ground zero, is when interest rates are going up, you're not buying your big ticket items. So new cars, that's the top. That's the real trouble for Ford and GM.
Well, Ford is they're phasing out a lot of their cars. They're going to be, I think the Ford Focus Active and the Mustang will be Ford's only cars by 2020. And I think the way Ford, if I'm looking at it correctly, and I think with the purchase of the train station and everything, they're trying to, I mean, they're going to be a car company. They're going to sell cars, but I think they're kind of trying to figure out the future, and they kind of missed the boat so far. But I think that, the whole autonomous vehicle, electric cars or something like that, I think that's what they're trying to go to. And by
they're going to have to,
they reinvent themselves, so to speak. And not that I've dipped my toe in the water yet in the stock, but I don't know.
I just took my toe out of the water.
Yeah. I don't
It got bit. My toe got bit. There was blood in the water. I need to take my toe out of the water,
like
Band-Aid that up, stitch up those stitches, and move on.
People like you, how old's your F-150? It's people like you.
I got to get a new F-150.
How long have you had it?
10 years.
Okay, so how?
It's too old now. I'm getting a new one. I'm getting a new truck. I'm going to spoil myself. I had a pretty good trading year. I'm going to spoil myself and get a new F-150. But that's besides the point. I'm not your typical guy that's going to, when interest rates are going up, is be buying new vehicles. But I don't drive it much. Only 120,000 kilometers, which is like 85,000 miles. So not that much on it. So anybody want to buy an F-150?
With rust, you
I
told
mean,
me
they're
about
probably
all the
gonna trade
rust on
in,
it.
So
Okay.
yeah, well,
I have a Ford too,
there's all
Joel.
kinds What's that?
I've got a Ford Fusion that they're going to discontinue in a couple of years.
What year's yours?
What year's mine? 2011. I want to
Are
say.
you looking to upgrade too?
No.
You're gonna stick around. What are you driving, Joel?
I still
You
got
still driving the?
that boat. I got a boat, Chrysler 300, and it is. People think that I'm like connected when I'm driving down the lodge in that thing. All I need is like tinted windows, but I'm due for a lease. I think I need. I don't know. I'm gonna try and buy American. Maybe look at a Buick or something here. But Spencer Arenas in here. We haven't talked anything. But
Well, this is a bad
Ford.
tangent.
Yeah. So Spencer,
All
our
right.
producer.
We
right,
drive
well,
now.
we
Let's go
got-
back to the markets here.
Yeah, we got
talk Dell. Talk Icahn here.
Yeah.
He's got a position here in DVMT.
Yeah, this story is never going to end. But Carl Icahn disclosed an 8.3% stake in DVMT. He said he would also vote against Michael Dell's proposed DVMT merger. Dennis, I know this one has dogged you for a while, but that's the news this morning is that Icahn is active in DVMT, which is, of course, the Dell tracking stock.
Supposed to track VMware, which does a very poor job of tracking, let me say, because VMware is $147 and DVMT is $94, 95 and a half this morning. So I have a little bit of this in my long-term retirement account. It's legacy stock that was given to me because I owned Dell, the original Dell, back during the financial crisis, and they took me out at like the low. It was because it was cash deal, mostly cash deal. And they gave me a little bit of this Dell Technologies, the VMware tracking stock. It doesn't even track well. So I basically feel like I got screwed back in 2010, 2011 when they took Dell private originally. And then, they did give me this tracking stock, but it hasn't tracked well. So I've still got that. But I'm kind of with Carl Icahn here. I feel like I'm going to get screwed here again. I've got a tracking stock that's 50 points below the stock it's supposed to track. And now you're going to take me off the board here. I don't know. I'm with Icahn.
Yeah, I mean, I could just look at the trading action in this, and that spread did blow out. Never really came back, right, Dennis? When it had that divergence.
Yeah, a little bit. I mean, that was all when you didn't know what was happening here either. So it's tough. I mean, you got a stock supposed to track. Now they're going to take it out the board. Is it tracking VMware? They're not going to give me $147 for my Dell tracking stock because that's where VMware is. So I don't know what to say about this. I've had it, like I said, forever since obviously they gave it to me after the Dell, and it's been that long-term investment portfolio, but it's so small position because like I said, it was 90% cash that gave me back on that deal. They gave me this little chunk of DVMT, which for whatever reason never sold it.
Real quick here, in the chat, someone says asking about the trading action in Square here, and oh man, the overhead supply in this thing right now. I mean, after coming off $100, a lot of red candles here. I think best case scenario for the bulls here is that you get that 101.15 high. You had your 65 low. So what's that? 35, 40. Let's see, 35 point move, take half of that, maybe get a 50% retracement up to like 82, 83, and then just hang in here. Chart very broken here. CFO leaving a lot of overhead supply here. I think the stock won't see triple digits for a long time. Trade to the high PE. Best scenario here, I see this thing gets a 50% retracement, hold it, and goes back up to the highs. But stocks like this are just out of favor. And I did have it on the short side, and I covered it long before that CFO. Well, I had a little bit left, but it was just it was hard. It was hard. I just didn't anticipate it going all the way down to 65. Now it's hard to short it here. I'd like to see a 50% retracement for either to exit along or try another short in it.
Absolutely in the middle of nowhere here. I mean, if you're going 73, flip a coin. This thing could, if the market rolls over, it's going to continue to roll over and retest those lows. Could it have a little, rally here? Well, I mean, we just fell 35 points in a week and a half from 100 to 65. Could it go back to 80? Could go up to 85 and still, be broken of the overall uptrend that was there. So, I mean, you're short at 74. You can give it to 85 to say you're wrong. I mean, I just think I think it's no trade here. I'm sitting on my hands on Square. Day trades are always there, but if you're looking for a swing trade in this, there's better places to look.
And also, I think I figured the 50% 50% retracement for like the all-time low.
What is it?
I think the all-time low, I think I see
What-
806. 806.
You're going down to $8.
And it went to 101. So, I mean, I think it came out to like 53 or 54. So if you don't think that this stock, all these people that are long from 16, 17,
there's overhead
18,
supply now.
yeah. And all these people, everyone is there still in the green. You know what? I would really, if you're like trying to hold on to this really long term, I'd really bank on that low from last week at 65 even, because I see another monthly low at 64.22. But then I think you take that out, the market starts to roll over, man, you see 60, you see 55, you could see 50. So if you're trying to hold on to your gains from long term here, I'd really focus on that low from last week, because
this is the stuff that money managers are so nervous about now. You know, the forward multiple on this is 123.
Oh, yikes.
So you're trading 123 times forward projected earnings. So this is the kind of stuff that's going to get hit the hardest, and it did. So if the market goes to roll over again, this thing could easily be $52. Now, if the market holds and the market starts to go back to all-time highs, this will claw its way back as well. But, you know, the trend is broken here now. Momentum traders are scared. Value traders want nothing to do with it. So it's that gap in there. So I'm concerned, and I'm, you know, if I was in this got back up to 80, 85, I'd probably be lightening up the position, because, and can it do that? Yeah. I mean, this thing's going to have a 5-6 point range every day for a while here now. So it can be wild, but this trend is broken. And I think if you're coming in here, I don't have enough information. Like maybe the markets, you know, show us at least, you know, that you want a bottom. Show us something, you know, that there's, you know, there's no indication here that the low on the market is in. And that's why I can't, you know, come in here and start buying a stock like Square. Could I buy some stocks that have value that I don't mind holding, you know, that have a lower multiple? Yeah. You know, that maybe have a good cash component? Yeah. But when I come in here, maybe this is the time to buy a stock like Square. Maybe we're just going to start, you know, taking off again. But a lot of people are burned here now. Anybody who's bought this in the last month and a half thinking, oh, Square is, you know, going to continue to went over 100. I mean, now those people are all looking to get out. You get back up to 80, 85, 90. I think there's sellers all over the place. I think there's money managers who are nervous. So I don't see the upside. Like, I don't see this thing just screaming back to 100 anytime soon.
And Sid is making a good point here, Dennis, and you make this point a lot. What about all these analysts here since July 24th? One, two, I don't know. We've had 10 or 12 price target raises. And one of the reasons that I wanted to short it was they had 3 price target raises. October 2nd, someone went from 75 to 115. October 10th, someone went from 81 to 94. And then on the 12th, Canaccord Genuity were upgraded from hold to buy and raised the price target to 60 to 90. What are these analysts going to do now?
They're nervous.
Yeah,
they're nervous. They made bad calls.
Right.
So, you know, if the stock continued to go down, they're going to have to play catch up then. It's the same thing why Alibaba, I mean, you know, we look at that one here and it's bounced back significantly here, but you got analysts here that are like under the gun here now. A lot of people are way out on Alibaba. Like if I go and look at Alibaba, and we talked about this one before, and look at the analyst estimates here, let's go find them. I mean, you've got, how many analysts covering this? You got 50 analysts covering this. 49 have a buy. 1 has a hold. I mean, these guys are all, you know, basically way out probably.
Spencer,
a lot of
can
people,
you show your pro here?
230 price targets.
Dennis, you got to see this in pro here. With the analyst ratings on Alibaba here. It is, I have never have seen so many well, they all maintain, but they all like bump their price targets. Look at that. I wish I would have looked at that sooner. Look at
Can we show it? Can we show it, Spencer?
Look, it's like the
there it is.
It's up there right now.
Look at that. Holy mackerel. All those maintains in price, you know, now maybe they'll come
Look at
down.
them all trying to lower the price target, like they're all lately trying to play catch up. The price targets they're lowering are still $275, lower to 275. I mean, you think it's doubling from here? You know how many overhead supply you have in this as well? And the P multiple trailing is 47. They're telling me forward multiple is only 25 on this, which is attractive. But I don't know if it's going to hit those estimates. I mean, maybe it does, but wow. I mean, there's some catch-up trade to do here too, Joel. So it's hard. And I'm long a little bit of Alibaba. It's one of those I bought the third of the position. I shouldn't have did that. But I mean, you look at this and it's an analyst got to play catch up here too. So you know what? I think there's sellers into these rallies.
Okay. I guess we got imbalances coming out here at 8:30 with the S&P.
Well, they're out. They're small, so nothing really jumping out at me here. Alibaba, we were just talking about, and you can just see, like, you get a good pop, and you're down 2 points here again on Alibaba. Not wanting to hold even Friday's gains. 102,000 shares to sell, so we have more sellers here in Alibaba this morning. We were just talking about Square. Square actually does have a buy imbalance this morning. 76,000 shares is very mixed. Some of these are buys, some of these are sells, and GE's 86,000 to sell. Looks like our GE sell guy is starting to reemerge here. Let's talk GE for a second here because everybody's getting on CNBC a week ago. We're getting on the bull train here. I was saying it's the hope trade, and I don't get on board on the hope trade because a lot of times it's hopeless. It's already, maybe it's market factors here, but this thing is given back 2/3 of the gain in 5 days. So a dog's a dog. And I just, maybe it's turned around. I think you're going to find buyers in the 11 handle. If we go back down, you'll have people who are like, okay, I was short GE. And there was a few people who were playing from the short side. I'm happy to get out. And you're going to have a few people saying, I think the bottom is in. I think that, the triple bottom that we got down there, 1122, 1121, and 1124 there from, the end of September. I think that's going to hold. I think it might hold too. So I actually might be a buyer in the 11 handle as well. But when you're chasing these dogs and people buying this thing at 13 and a half, on the CEO change.
Yep.
Still a lot of problems here, and those people are immediately burned. They're down 10% already. So just be careful with what you're chasing. When you're chasing dogs, it's a really good way to get bit.
I had this one too last week, and I just got very frustrated because it just seemed like it was just like an endless bid for it when the market was cratering. And
Do you have puts on this?
Yeah, I did. I covered them like in the 1290 area, and then the next day it comes out with bad news that they're delaying their earnings. Did you see that? Did you see that?
No, actually, I didn't.
Yeah,
There was so much news last week. I missed a lot of it.
Yeah. So man, it's just it was just more, if I just one of those things where I just wouldn't have looked at it and went far out on it, but it was just like the market is getting crushed down 800. I want that to be down a stick. And there was just, it was just, they're buying dogs like that. But yeah, I think now it's already had the 50% retracement, maybe wait for the gap fill. There's a nice gap in here between 1151 and 1194. So maybe if this gets in the middle $11 handle, take a look at it. But man, oh man, I mean, just that move, when they have moves off something like that, I mean, how long does it take for the for the new guy to institute his policies? How long is it going to take for it to show up on the balance sheet?
And does it work? Does what he's doing work?
Yeah.
Because obviously, over the last guy, I mean, we haven't. It's just so many problems there. There's so much debt. There's some issues. So it's a big job for anybody to come into. So you come in here, stock goes from 11 to 13 and a half because it's got, goes up 20% because new CEO or over the course of a couple of days. I mean, it's a selling opportunity. It was again. Jump over SFIX. Matt's asking about here. This is definitely the stocks I don't want to own either, but it's starting to show some life. So I will say, of all the Momo plays here, we look at Square and we look at these. 2234 low, I think it's safe for now. I think the short-term low might be in this one there. Again, this is a stock with a ridiculously high multiple. I just like to go look at this because you know what? We've been saying forever, earnings doesn't matter. Well, they do right now because you're in a de-risking environment here. So it actually does matter right now. Forward P on this is 175. Is this the kind of stock you want to own? That's on the estimates there.
No, it's one I tried to own last week too. Is one of my few long. It got rid of it.
So hard to buy these kind of stocks. It got killed. We were $53. It's been cut in half. You got some support down here. Technically speaking, you got some support in the 20s, lower 20s, and we've bounced there. So if you're buying this in lower 20s, you got a technical trade. I'll still tell you from a valuation perspective, these valuations are crazy on some of these stocks.
All right, it is 8:34. Time to take our first and last break of the day. We'll grab Gil Morales. He is the author of the Gilmo Report and the managing director at MoKa Investors. So we'll be right back in a moment with Gil. Welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, Dennis Dick. Now joined, as I just mentioned before a break, Gil Morales. He is the author of the Gilmo Report and the managing director at MoKa Investors. Gil, how's it going this morning?
Not too bad for a Monday morning.
Monday morning. I just want everyone to know that Gil's out on the left coast there, so he gets up super early for us. So we really appreciate that. First things first, I just want to talk about the characteristics of the market before we had the decline. A lot of times going into a quad witch expiration, you see just excessive amount of activity in the markets, people rolling over positions, establishing new positions, and a lot of times important turning points in the market here. As it turned out, we did make our all-time high on that Friday of the quad witch. Did you see anything in the technicals or anything in your work around that period that perhaps you either, if not bearish, more cautious?
Oh, definitely. I mean, I think it's pretty well documented both in my report, the Gilmo Report, and also on the other website I do with my partner, Dr. Chris Ketcher, virtueofselfishinvesting.com. We were seeing very little in the way of compelling long setups. In other words, stocks that we felt had significant upside potential. Most things that were showing marginal buy signals were things that had already had long price runs and were fairly extended in their patterns. Now, what's very interesting is what we saw going into the end of the summer, given that we couldn't really find anything that was fitting the parameters we're looking for in terms of growth potential or upside potential, our focus list on Virtue of Selfish Investing dwindled down to 3 stocks: Amazon, Fortinet, and Square. And that was throughout August. And if you look at charts of these 3 stocks, they did very well in August. So really all you needed to do was own those 3. But more recently, over the past week and a half, those 3 names have dropped off the list, and we now have 0 names on that list. And since that list has been around, which is almost as long as the amount of time the website has been around, since 2010, we've never had that happen. So this is a very unusual situation. But we were seeing nothing that we wanted to buy, and yet we were getting emails from subscribers, whining to us that, oh, why don't we have more stocks on our focus list? But we just were not seeing anything, and we stuck to our guns. And I think the last week pretty much vindicated that point of view. And that was also confirmed in the Gilmo Report, where I was bearish, well, not necessarily bearish, but cautious as long as 3 weeks ago.
And what's the most you've ever had on there? What's the most amount of stocks that you've ever had on that list?
Oh, in excess of 20. When things are really trending really well, and so it's had a lot of names, but they've just dwindled off. We saw the Chinese names come off. We saw Netflix, Facebook, other names. Nvidia was another one that dropped off, and that just continued. Meanwhile, we could not find anything to replace them, and we didn't feel that industrial names necessarily were going to provide big upside growth potential.
Is the criteria for those stocks, is it about technical, fundamental, or a combination of both?
Well, Dr. Ketcher and I are both, trained by William O'Neill. So it's based on our basic discipline is based on his original work, and that's the foundation of what we do. But we've taken it a little bit further. But it's essentially a fundamental, or how can I say this? Fundo-technomental method that combines fundamentals and technicals. Also, and I would say even more importantly, thematic considerations. I think as far as fundamentals go, most of what's occurring in the stock is known by everybody in any given point in time, and most of the smarter players who are trying to gain an edge are trying to look a little bit forward. So their thinking has to be more thematic in terms of where things can go in terms of possibilities, and you see that in a number of names. I think Tesla is a great example earlier in the decade. So yeah, that's basically how we pick stocks. And
what do you think of Tesla here?
We're not seeing anything.
What do you think about Tesla here at 250 and change?
Oh, well, we put it out as a short at the 200-day moving average. So we've been believing it's a short along there, which is major resistance. And it looks like it's heading lower from here. But, they're just a car company, and they're a car company that doesn't seem to be able to make very many cars or make very much money off of the cars they make. So, I mean, we could be looking at another potential rally back up to the 200-day, 50-day confluence in this position. But, I think it could go either way. You're either in a bear flag here, running along just below the 260 level, or you're going to try and rally back up to the upside. And I think all that's going to depend on whether we get some sort of a sharp reaction rally, oversold rally in the indexes, which is a possibility in this position right now.
Are there any other companies that you like? You said Tesla maybe from the short side. What is there any other companies like from the short side?
On the short, well, we got heavy short last Monday, so that was the day that the market was rallying sharply because of the Sunday night agreement between the U.S. and Canada. I guess you call that a trade reconciliation. But I tweeted on Monday. I said, okay, the financial talking heads on cable TV are never going to tell you when the market's up big that it's a selling opportunity, but whenever it's down, it's always a buying opportunity. But since you never sell anything, I always wonder, well, what money do you use to take advantage of such a buying opportunity? But I tweeted that this is a selling opportunity, and you sell into this because they had a lot of stocks jacked. But the other thing is you were already seeing divergences showing up on that day in terms of breadth, in terms of the number of new 52-week highs versus 52-week lows, and interest rates were starting to percolate a bit. And so that to me was the peak. And that's actually where we started getting pretty heavy shorts 2 Mondays ago. So exactly 2 weeks ago, rather. And that all sort of came to fruition last Monday when things just broke down very sharply. I mean, the downside velocity was quite amazing. But if you look at it or look at a chart of the indexes going back to the beginning of the year, it's very similar to what we saw in early February. So you can see back then we did snap back and roll over a couple of times. But that was eventually the low. I think in the second week of February, the absolute low occurred then. But then we just chopped around for a long period of time. Now, do we do something like that again this time? I don't know. I mean, it's very difficult to tell. It's a very strange market, and it's very difficult to predict what's going to happen on a day-to-day basis. When one example of this would be look at the futures. I mean, I see every morning the futures can be up big or down big, and by the open, they can be back to flat. This morning we saw the NASDAQ futures down 50 something a couple of hours ago. And now here we are, we're rolling back closer to the flat line. And so I think a lot of this also is manipulated. And that's just the way it is. And we're going to have to live with this, some volatility for a little bit here and see whether things settle down. But, we could be seeing a shift in interest rates. That's not clear. There's a whole bunch of geopolitical and say geoeconomic things going on, from tariffs to disputes with other countries over various things, to what they're talking about at the dawn of a new Cold War with China. All of those things are negatives, and you don't know how those start to pile up. It's particularly when you have this huge and massive debt bubble globally. Yeah. And when you have a bubble that big, what the pin that pops it all could be just about anything. It may not necessarily be the Fed, although I think what the Fed is doing right now is akin to trying to push a pin against a very tautly pulled skin of the balloon and try to see how far you can push it without popping it. That seems to be what they're doing right now. So, I don't know if that's what does it, or if it's something with China, or if it's something else that disrupts the status quo just enough to provide a pin that pops the bubble. So, because we're sitting on a bubble, I mean, there's no doubt about that. And it's a question of how that eventually resolves itself. And frankly, I don't really see the U.S. paying off its debt or anybody else. So from Europe to Japan and everybody in between.
Do you think there's a possibility we could eventually go into a financial crisis part 2? I mean, obviously it was really ugly back. So I've said for a while, I mean, really didn't solve any problems back then. We kind of just, bought our way out of the problems.
You
put ourselves in a lot more.
Papered over them by printing money. That's
what they did.
Yeah, and if you think about it, there's all this talk about economic miracles and blah, blah, blah. But really what we have is an economic growth, marginal economic growth over the last 10 years that's predicated entirely on printing money. I don't think much of it is really organic. And then you listen to Trump crow about his 4.1% GDP growth, but that's not really annual GDP growth. That's 1 quarter annualized. So it's really 1% the last quarter. And if you go back and look at the Obama administration, they actually had a couple of quarters. I believe it was the fourth quarter of 2011, if I'm not wrong here, 4.7%. I think they had 5.1% in the second quarter of 2014 and 4.9% in the third quarter of 2014. And so Trump gets 1 quarter of 4.1%. He's telling us all that the economy is stronger than it's ever been in the history of the country. And I'm thinking at that point, so let me put my boots on, because it's getting a little bit too deep here. So, and the other thing is you have fiscal stimulus that's really, off the charts because we're running I think the trailing 12 months is a 1.2 trillion deficit, if I'm not wrong there, roughly, something like that, but over $1 trillion. And it looks like we're going to be running $1 trillion plus deficit. So, that's like having a huge credit card, and you go around spending with that credit card and talking about being rich, sure, give me a credit card with a $3 million spending limit and I can look pretty damn rich too. So, to me, we're just built, the whole thing is built on a house of cards, and I'm surprised it's lasted this long, and maybe it lasts a little bit longer. I don't know. I'm just a trader, so I'm going to go with the setups I'm seeing. So things I have liked recently are the, what I call the weed patch, the cannabis stocks or the pot stocks.
Let's get to those. We're on with Gil Morales, author of the Gilmo Report and managing director of MoKa Investors. We got a lot of people talking here about the pot stocks here. Kron, CGC. I guess CGC got started with Constellation
Tilray.
Brands and Tilray. Now, are you liking these as a just pure technical play?
Trade.
Okay. So
yeah. In fact, I blogged on Thursday morning that I was looking at these names and they were setting up. So Tilray was actually showing what I call a voodoo setup along its 20-day exponential moving average. The volume is drying up very tightly or very extremely, and it's sitting right at the 20-day exponential moving average. Kron was posting what I call an undercut and rally type of setup, which is a variation on the Wyckoff spring. For those of you familiar with Richard D. Wyckoff, and that's up about 10, 13, 14% from there, based on what I'm seeing in pre-open trade. I see we're bid 1055, so we were trading close to 9 on Thursday. The other one is Canopy Growth. So of those three, I think Canopy Growth might be the better fundamental play, but I'm not really an expert on the whole business. I've looked into investing in a growing operation. But in terms of running a small growing operation, I think that's the margins are too small to justify dropping $1 million into something like that for a 1,200 square foot operation when you have these big growers that are going to move in and they're going to commoditize it. But if you think about it, it could be similar to, I don't know what it was like to get into Archer Daniels Midland when they first started, or any other agricultural name when they first started. But I think a lot of this still has a lot of growth potential. I do think you'll see the U.S. eventually legalize the stuff nationwide. So, and it's in California, it's legal, and a lot of the terrible things that people predicted would happen haven't happened. You don't have, you don't come to an intersection and see 20 stoned people all running into each other. It's pretty much the same as it ever was, which means we have mostly drunk drivers on the road. So,
real quickly here, if this is going to be the kind of recovery that we had back in February here, and I know I think about you a lot, Gil, when I'm looking at charts or something, and I see a bunch of lows in the same area after extended decline. You see the institutions coming in here. How long does that take? Does it take a week or 2 weeks or 3 weeks to build this base? What are you looking for an indication that we washed out and we're just going right back up?
Well, one of the things that I use and have used frequently in this market, because every time we sold off, the market eventually finds its floor and just turns back around to the upside, right?
Correct.
And right about then, everybody's bearish, and all the guys who are telling you that it's a buying opportunity have suddenly turned bearish like they did last Thursday. And then what you start to see among individual stocks is the undercut and rally move, which is you have a prior low in a pattern, and a stock will undercut that low and then turn back to the upside. And I use that as an entry signal when I see it, and it's coinciding with the market trying to turn off the lows. So it's a very simple setup to use. You're basically taking a prior reference low, and that becomes your entry trigger point. So once it comes back up through that prior low, so let's say the low is 2350, and you come back, stock drops down to 21, and then turns around and comes back up to 2350. You're triggered on a long entry at that point, and then you use a 2350 price level as your stop. Now you can add a percent or two for what I would refer to as porosity, and you keep it tight. And those are the tightest entries that I find in this market. I think idiots buy breakouts these days, but yet there's more than a few people out there selling that method to people. And you can look at all the breakouts that occurred in the end of summer, at the end of summer, and they've all failed, miserably. Canada Goose, Planet Fitness, again, you just go down the line, you see all these breakouts that blew apart. Autodesk,
All right. Gil Morales has been on the line with us. He is the author of the Gilmo Report and the managing director at MoKa Investors. Gil, as always, great interview. Thanks for the time, and have a good one.
My pleasure. All right. Take care.
All right.
Bye-bye.
All right, S&P futures quiet here during the pre-market show. We're down 4 1/4 at 64 1/4. Really battling to go green here, and I think that'll be important early in the session. You had a closing price from Friday at 68.50, so that will be your level of control. Pre-market high just above that at 71 1/4. Dennis, quiet in the futures. What are you seeing out there?
You know what's quiet in the stocks here too. I think everybody's kind of sitting on their hands. The only thing stocks that I do see strong here again is gold. So gold is showing some life
what
here.
about that?
I mean, it's classic defense. So, I've joked, and, I'm not even fully joking, but saying, I do like my Virtue Financial as a defensive stock because it's paying me a nice dividend and it seems to go up when VIX goes higher, and it does. But gold traditionally is what people buy when they're concerned about the markets, and that's what you saw the last few days. And you're seeing a rally here again in gold, so it's not surprising that we see the gold stocks take off when the market starts to show extreme fear and extreme weakness, and that's what we're starting to see here. So could this continue for a while? Yeah, it could. Am I going to become a gold bug here and start getting all bullish gold? Nah, long term I still don't like gold, but short term, I mean, it's had a nice pop here. And you can't argue with the technicals here. Gold is starting to show some life. Then you got to think silver as well.
Yeah, silver been a little bit of the laggard here. Maybe that can, I'm just looking at the correlation to the two that hasn't even got back up over the $15 level yet. But should we cover some stocks from the chat here?
Let's do some ratings.
We haven't done anything.
Yeah,
we got
so many ratings.
Let's do it.
A lot of ratings today. All right, I'm going to run through the upgrades first.
Sure.
We can do downgrades after that. So just running through the list of what caught my eye this morning. Macquarie upgrading Wells Fargo from neutral to outperform. Evercore upgrading McDonald's to outperform. Wedbush upgrading American Eagle and Lululemon both to outperform. JP Morgan upgrading Ralph Lauren to overweight. One more, Barclays upgraded Activision Blizzard ATVI to overweight. Those were like the 6 big ones that I saw. Was there anything else that caught your eye as far as upgrades is concerned, Dennis?
No, those are the ones you covered them pretty good. I mean, there's some smaller companies there too. Let's just jump Activision Blizzard, stock we haven't talked about for a while. Its stock was wild on Friday, and I'm not sure if there was an individual headline, if that was just a pure bounce back there, but obviously it's a stock that had broke from $82, gets all the way down there to 73. A big pop back. Now that again seems to have been faded here. It's getting upgraded this morning, but I don't know. Is it downgraded or upgraded? Activision Blizzard. Hang on.
That's an upgrade.
Well, why is Activision trading down? That's why I just brought it up. It's down $1.
That's an upgrade.
I thought it was an upgrade too.
It is an upgrade at Barclays to overweight.
Is there other news on Activision Blizzard? Because Activision Blizzard is down $1 and a half here now. It's got to be something else.
Let's check the news feed.
I'm looking here. Call of Duty sales. I'm just looking through my timeline here.
Me too. I don't see anything that would cause that.
ATVI is trading down, so something's going on here because it was trading up here this morning. It was up at 78.50 like 10 minutes ago. So something's happened here in Activision Blizzard. Take-Two or any of the other ones down? Just trying to see if there's sympathy here. No, I don't know. Something's going on in Activision Blizzard. ATVI is trading down $1 right now, and it's upgraded today, so that's interesting.
Keeping a close eye here on 79 even. You had the 84.68 all-time high. Came crashing down to 73.43. Your 50% retracement comes in at 79 even. You hit 80 1/4 on Friday, trading down here. Couldn't get that close though over 79. You closed at 77.92. So close over 79 here, and I think you're greener pastures ahead. You got a lot back just in a couple days on that rally. I'm not sure why it was so strong on Friday, but really like to see it close over 79 here. In Activision, and then EA, that's the one that came out with the bad news. And that's one thing too, folks, when you're looking at stocks. EA came out with bad news. This was back at the end of August, coincided with that event that happened in Jacksonville. When a company comes out and tells you okay, things are not going to be so good for the next quarter, then you kind of got to listen to them until at least the next quarter here. And the stock has had a few pops, but now back on the low of the move.
Yeah, and something obviously I haven't found the news. I was just trying to dig what Joel was doing the technical on it a bit. I haven't found anything here. 15 minutes ago, Activision Blizzard was trading up, and obviously that was off the upgrade here. It's still an upgrade, so I don't know if there's another analyst action we haven't seen yet, but we're now down $1, so it's giving back all those gains and is now trading in the red. So something happened with Activision Blizzard. Jump over here at McDonald's. We haven't talked it for a few days. MCD catching an upgrade at Evercore. I look at this chart and kind of see it broken too. I mean, they all look the same. We start looking at things. You see something upgrade, it almost feels like a fade. If you could get up, I would say if you're looking for a short opportunity, we're up near that 167 area there, where you were the high there just from 2 days ago.
Oh yeah.
I think there's sellers all over the place. So I'm probably buying almost nothing that is upgraded. I'm more looking at the rips or something that's upgraded as a selling opportunity.
It's tough here. I mean, because you're coming off that 172. That was not the all-time high. So you can look at a retracement. If you're going to look at a retracement, use the 178.70 to the 153.13. What's that? 25, half of that, 2.5, 165 and change is the 50% retracement of the big break. Harder to pick resistance, but excellent support. 162 pair of lows from Thursday, 161.82, Friday, 161.86. So a breach of that level. Continued downside here for Mickey D's. And also people are, asking in the chat about the U.S. Saudi. I mean, there are some tensions going on here. Maybe that's giving a bid to gold a little bit in the oil. But it's not like, an eminent, war or anything. So I don't
trade the ETF, KSA.
KSA, that I didn't know. Saudi
That's the ETF?
Yep.
I don't think it's got some volume, so you can actually trade it. It's very liquid. What's happening this morning?
Yeah,
it's one trade just down. So it doesn't really have a market yet. So
if it gets up to 28.50, I mean 28.62 and 28.64, your highs from the last two sessions here. But so far, market doesn't seem to be too spooked about the international tension.
As far as downgrades are concerned, we had Nucor. So Credit Suisse is downgrading Nucor to neutral, downgrading Steel Dynamics to neutral, and downgrading Cleveland Cliffs to neutral. So 3 downgrades there from Credit Suisse. We had KeyBank downgrading Imperva to neutral, or their version of neutral, sector weight. We had DA Davidson downgrading Nutrisystem and TRI to underperform. And there was one more that caught my eye.
Cowan, no.
Yep, Cowan downgrading Rockwell to underperform.
And PH. They downgrade both to underperform.
So
man, you just look every single chart, Joel. I mean, I bring them up and I look at stocks and I'm like, oh, they're on the dailies, they all look awful. It's hard. That's why it's hard to come here and just buy. We need more information, to be a buyer of any of these stocks, and sometimes, I never like to buy, but I like to buy dips if we're in that kind of environment. But to really be a buyer, you got to come and we need to see like some double bottoms. We need to see the market show something. And we just don't have enough information here yet. Maybe the low is in, but there's a lot of unknowns like Gil was just going through. There's so many, political worries as well. So, I mean, there's just so much things to worry about here. Now the market seems to actually be worried about this stuff. They ignored it for, 2 years here. And now, we're starting to worry about the stuff and interest rates going up. I mean, I just don't see the reason to just come in here and say, hey, let's start buying the dip in all these stocks because they're all going to come back. Because, what if we are in 2007 right now? What if we are before some, serious sell-off here? These happen. And we haven't had a serious sell-off. And anybody who's been in this market and just new to the market in the last 7 or 8 years has never experienced something like we did in 2007 and 2008, or never experienced something like we did in 2000 and 2001. Every decade or so, you get to some serious sell-offs. And, you can see the market fall 50%. And that's possible. I mean, is it going to happen here? I don't think so. We don't have enough information yet, though. So that's why I'm like, I don't want to come in here and start buying right away, saying that we're still in this, overall uptrend here, and we're going to bounce right back here, because I don't know. And I just look at the world markets, and this is what really, when we really were analyzing it here. The last 7 years, China is like basically flat or slightly down. Canadian market's been terrible the last 7 years. It's been the U.S. markets, and that's it. And is that going to continue? I don't know. Maybe the U.S. market's going to do a little catch-up trade and maybe start to sell off a bit more too, because I tell you, the world markets are not looking nearly as good, or they've looked bad for a long time, and the U.S. markets have shrugged it off. Well, they're not shrugging it off now, and that's the concern. So maybe maybe it shrugs it off and maybe we just rip right back and we'll be, at all-time highs here by the end of the year. It's possible. But I'm not making that call here yet because I don't see any reason to jump in. I don't see that, the technical formations here on anything that says that we're turning it around yet.
And just real quick, this Rockwell here, if you are trading it, keep an eye on 170.06. That was your low on Friday. Man, that matches another low on August 23rd. You had another low here at 170. What do we say? There's no such thing as a quadruple bottom here. So keep an eye. If you're trading Rockwell, big old number there at 170. Needs to hold for that stock to have any kind of chance to rally today.
Hey, our Crystal Biotech. I don't know. Hopefully you're still holding their spinner. I know a lot of our guys in the chat. I've still got this one. KRY, speculative position there, but they're telling me I didn't know that. Thanks, Spinner, that they had some positive data come out here today. So it is bid up here 3 points right now. Well, actually, it's trading up at $18, bid at $18 as well. So for you in the chat who are following this story here, I guess I had some positive data today. So that's good.
I can see you sneaking your order out there at $20. I can see
to sell.
Yeah. Or is this
it's speculative. I'm probably sticking with this one. I you know what I could do though is if you sold half though, you sell half, and then I'm playing with complete with the house's money because at $20 is a double for me. A lot of us were buying this in the 10 handle there in the chat. So and it's sold off significantly there. Interesting, on Friday that it had a nice bit ahead of this data though. Maybe they knew it was coming, but boom, stocks trading up. Maybe you're right. Maybe I should sell half. Play complete with the house's money. You got me thinking now, Joel. I was saying, I'm going to get eternal embarrassed. Now I'm going to get a pop up here on this thing. Maybe I sell half, play with the house's money.
No,
not a bad idea. Not a bad idea.
No, come on. Remember, I told you to sell. I told you had to exit MasterCard at like 100. So just stick with what you.
Well, I just exited half of it at 203, so it was good. But yeah. Anyways,
okay.
I sold some MasterCard. I didn't have the whole position. I sold it all the way up a little bit too. I probably sold some back at 100, but. Anyways, it just kept growing, so I got big again. So sometimes you got to do adjustments when you got big positions. But Crystal Biotech is a very small position for me, so I don't know if I'll just stick with it, but we'll see.
And on that note, that's going to do it for our show today. So if you missed any part of it, you can catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Just search for PreMarket Prep or Benzinga on any of those platforms. And it's official now. We are less than a month away from the Benzinga FinTech Summit, November 14th in San Francisco. If you want to hobnob and learn from all the biggest names in the brokerage space, people from TDA, Schwab, E-Trade will all be there, as well as people from Ripple, the co-founder of Venmo. So if you want to check all that out, go to bzsummit.com, enter the promo code PMPVIP. That's Papa Mary Papa. And very important person for 80% off your ticket at bzsummit.com. And also, I put it up on the screen earlier. Benzinga Pro is Benzinga's real-time news platform. If you would like to get a free 2-week trial or just go ahead and sign up, you can go to pro.benzinga.com, enter the promo code AMPRO, like Alpha Mary Papa Romeo October, to get 25% off a Benzinga Pro essential package that offers good until the end of this month. It gives you access to our Squawk, our chat rooms, our SEC filings, breaking news headlines, and the works. So check it out there, pro.benzinga.com. And on that note, we're out for today. So please remember that all the information from our show is for informational purposes only and not meant to be investing advice. And I hope you all have a good day. And we'll see you on Tuesday.